Welcome back, traders, to the free futures course, and in today's video what we're going to be doing is breaking down the footprint. We're going to continue on with the order flow that we started last time around with Delta and dive into the Delta footprint, how to use it, what it is, from basics to advanced. And this is going to be one of the key aspects for execution using order flow. This is a huge component to the whole system and strategy, and we're going to be tying in the setups with the footprint today so we can piece things together and start talking about execution, which is going to be one of the main concepts for the following videos. So let's dive right into this. Let's jump into the screens and break the Delta footprint down along with more trading setups. I'll see you guys there, and remember, hit that like button, hit that subscribe button, and we'll jump right into the video after this intro. Alrighty people, we are back on the screens here, and today what we're going to be breaking down is the footprint in its entirety. What I'm going to be looking at is a specific type of footprint, a Delta footprint here. You can see it on the screen. We'll talk about S&P and Nasdaq because there's nuances to both of them. But first and foremost, we have to understand what it is that we're looking at, how we're looking at it, what is it we're looking for, and so on. We're going to be breaking things down, so by the end of this lesson, you're going to understand what the footprint is and how it works, how to read it both on the S&P and the Nasdaq, and what Delta tells us about market strength, weakness, and trap traders. Also, how we can start thinking about the execution using the footprint. First and foremost, we got to break down what is the footprint. This is the most basic part. We have to understand what it is that we're looking for before I start throwing in random words and abbreviations and whatnot to get people confused. Most traders look at candlestick charts, right? They look at candles that show high, lows, closes, different shapes, different bodies, but they don't necessarily tell you who's actually active in the candle. The footprint chart changes that, right? It breaks down each candle into price levels where you can actually see the buying and selling volume at each price. Think of it as opening up the candle, seeing the battle between the buyers and the sellers, and seeing who's actually in control. So you can see right here, right? These are the basics of the footprint. What is it that we're looking at? First and foremost, this is the Nasdaq footprint. What we have over here to start things off is the profiles on the right, right? So we have a volume profile mixed with a Delta profile here for each session. This is the extended trading hours session here on the furthest right, and then this is the prior RTH. But what is the meat of the whole meal over here? This is the footprint chart. So each individual candle is a footprint candle. Now, within this footprint candle, what we have is at the ask traders, at the bid traders that are going on either side within the candle itself. So if I expand it, we'll see that there's actually numerical values within. Now, a lot of footprint charts and a lot of footprint traders, they focus a lot on what's going on within the candle. I think that there's validity into that. It's just that I don't really want to look at every single individual number and see what's going on, right? A lot of people highlight imbalances, which is important. They highlight areas of heavier volume, lighter volume, see the reactions. But I'm going to make this a bit simpler for us, and the way that I use a footprint is going to be based on Delta. Delta at each level is right here attached to each individual candle on the right-hand side. This is a 12-point range candle on the Nasdaq, so each candle represents 12 points. What else we have on these candles is that at the top of each of these candles, you can see the total delta that is created on the candles, which is also down here. The first column is the delta of the bar. The second column is the delta on each throughout the day itself. The bottom column is the total volume on each candle traded. But what I'm going to be focusing on is the majority of what's going on here, candle by candle, move by move, expansion by expansion, contraction by extraction, comparing deltas that are created. The premise of the trading strategy and system that I use is based on finding outliers in the market. So Delta is a fantastic way to look at the ask traders minus at the bid traders. What is the difference? Is there positive or negative delta? Who's in control of the whole thing, right? What are the reactions based on these outliers? So when we dive into what the delta is a little more, you can see that there is Coloring, obviously, right? Positive delta, negative delta. And you might be asking, okay, well, if I look at this, they all kind of look the same. This is where there's a color-coded differentiation, right? Before we look at what's in the candle a little more, you have the color-coded differentiation where heavier delta starts to get lighter and lighter. So light blue, light red, as you can see here, these are components of larger delta that comes into play. These are the outliers that we're going to start to look at, and we want to see what's going on. You have these color-coded little diamonds, circles, whatever you want to call them, sometimes above candles, meaning that if it's a positive blue candle, meaning that it's going up, and it has negative delta on the candle, you'll get this little red diamond. Just like you'll get a blue diamond over here if you have a candle that goes down with positive delta. This is some type of a delta divergence. I'm not fully going to be using that realistically. What I'm mainly going to be focusing on is the outliers of delta, how markets react to them, as well as some of the cases where you have imbalances within the candle. These imbalances are highlighted numbers in blue or red that dictate there's more aggression to that side of the push. So, like I said, this is a delta footprint. Some of these basics that we need to understand first and foremost is that delta is going to be the difference between the market buys and the market sells at each price level, which generate these deltas. So when I look at this, you have naturally stacks all over the place of maybe low delta, medium delta, heavy delta. What a lot of people have done is actually just completely abandon all the delta other than these very aggressive highlighted outliers. So if there's buyers that are lifting the offer aggressively, delta goes positive, right? And we're looking for these very light numbers. If there's aggression, sellers hit the bid aggressively, what happens is delta goes negative. This tells us who's in control of the move. But everything to do with order flow, as we saw with the overall delta profile over here in the last session, it's dependent on the reaction of the movement. So how does price actually react to the delta that's coming in, right? So when I'm talking about a setup and I'm talking about how I want to look at the highest probability move, it's not like, oh, I'm only going to be looking at where delta is aggressively red, aggressively blue, whatever the case is. I'm going to be looking at delta that makes sense from the perspective of traders actually reacting to this very large negative or positive delta. How do they react? So if we take a look at the setups, it goes as such. Number one, what we're going to be doing is we're going to be looking at a volume profile type scenario, right? If I look at the volume profile, the idea that I have here is that we want to see where there are major distributions. Now, order flow is great to look at throughout all the time, but a lot of people do get confused and mixed up in terms of what's going on at certain points. So we can slow things down by saying, okay, realistically, I only want to trade areas that make the most sense, which are going to be distribution extremes. So if I have these distribution extremes set up like this, right, my interest on this Nasdaq is going to be around the 875 and it's going to be around that 815. Right, at these distribution extremes. What I'm then going to do is I can look at delta that shapes up on the session itself, on the delta profile, to give me some kind of understanding. So you can see over here, first and foremost, at this 880, there was an accumulation of negative delta, and it looked like there was some kind of buy pressure that we could have seen that move up. That necessarily didn't happen. So over here at this low, around that 815, you have this clustering of all of this aggressive absorption, right? You have a lot of sellers hitting the bid aggressively and not allowing prices to move down. At that point, I start to get interested. Once I create areas of interest, then I start moving into the delta to say, okay, realistically, what's going on with the actual zone at that point in terms of aggressive buying, aggressive selling? So if we take a look at that at both of those areas, let me show you exactly what it is that I want to see and what's going on. So when we take a look at these regions, what I'm looking at in terms of this delta profile is going to be if there is aggressive buying that comes in against aggressive selling. So if I have an area of interest, for example, this block, What I want to see is the negative delta that comes in but stalls out. So once negative delta stops, because this is also how we can read trend moves in the market. When we look at trend moves in the market, and this is specific to Nasdaq before we jump into the S&P, but as markets move to the downside or upside, in a strong trend, you have stacks of very aggressive delta that highlights in red, in this case, in the direction of that move. That move starts to break up when this aggressive delta gets pushed aside. So when I look at this trending move, you have aggressiveness here, here, and here. Step number one is going to be finding an area where the aggression on this negative delta gets reversed. So I'm going to be looking at candles that actually push against it, and what happens is all this negative delta gets absorbed, and what happens is there's passive buying against this aggressive selling that's continuously trying to come in to hold these things out. Number two, what I want to see is I want to understand, okay, if we go up even from this area that's supposedly trapped and there's some kind of passive buying, is there going to be a region where there could be a stall out where the seller actually might continue? So in a strong trend on the way down, you have all this negative delta that continues to stack, meaning that I've got some expected sell zones at these spots to see if those sellers actually want to communicate with price and roll over. So as you can see, when we come back into this spot where this selling comes in, they start selling again a little more aggressively, but people look like they're getting trapped. So the idea over here is that we have absorption with passive buying. If we can create a higher low over here with more absorption and passive buying, there is the potential to run through so that we can get that momentum move back to the upswing. So I looked at this, right, and the idea was, okay, they start getting absorbed and some passive buying is coming in with this negative delta, so I think it's worth a shot to see if we can go to the upside. But again, we still have strong trend movement to the downside because there's all this negative delta that's stacked up that's trying to push traders continuously lower and lower. So the best case scenario is we expand through those areas. Once we start flushing through those areas with 10, 15 points of movement on the Nasdaq, you have a higher probability of actually looking for that turning point and the expansion. It's very different from what maybe a weak trend might look like. If I'm looking at a weak trend to the upside or the downside, generally speaking, what I'm trying to see is if there is barely any delta that's trying to support prices higher. So for instance, we have this move to the upside over here, all the way from about 23,906 going into, let's say, 23,970, something like that. So you have like 65, 70 point move that expands. Now, when you look at this whole movement here on the Nasdaq, what you're not seeing is super aggressive, right? Very light delta. So it tells us that there's actually weakness of the trend. So when I look at this, I'm not super confident that there is continuation because the upside doesn't have too much support. If we start breaking through some of these very elementary areas stacked on this one individual measly little delta, you have a higher probability of turning prices over. So when I'm looking into highs, I'm looking at traders that may get absorbed, which is aggressive positive delta met with aggressive negative delta that actually pulls prices over. And realistically, if you start breaking under this minor little baby support, what happens is you have the expectancy of a larger move to the downside. And if you compare that past buy-side momentum to all of this selling that's going on, you're seeing evidently that there is a stronger continuation, stronger trend move to the downside. So if I'm trying to look for a turning point, realistically, we have to start moving through all of the massive, massive sell side delta that keeps coming in. So you have this area over here that has aggressive negative delta. It pushes lower, okay, people get trapped. When you come back into this region, all of this buy side that tries to come in fails, and it's holding the directional move to continue, and on the way lower, you have aggressive large sellers that are trying to take control. So I can try to find turning points, I can try to find support resistances based on, let's say, negative delta into a low on the Nasdaq that's actually holding out, holding bid, and I'm looking for a pop through some of the sellers that actually pulled the move lower to create a higher low. that would be ideal to find the turning point. Otherwise, you're looking for a continuation to the downside. So as we come down into another key area, and again, my main focus is if I'm seeing the delta movement into key areas. That's what makes the most sense to me. Once I start seeing it into key areas, then it starts to make a lot more sense. So in and around 815, 810, you have huge delta that comes in, right? These are massive blocks. On Nasdaq, if I'm starting to see things over 100 negative or positive delta, that's something very sizable that you want to pay attention to. So once this comes in and you start to see rejections, obviously you have a lot of sell on a strong move lower. You have the potential for a turning point, but to what avail realistically? So some of these moves, right, when I'm looking at them as a stair step. So every time a new seller might come in at a lower price, that's just a lower barrier to see if the buyers want to break through. So initially we have this massive area of negative delta. If we can pop up a bit and create a higher low, it makes sense for that long side, right, to see that potential turning point. When we pull lower and we push back above these monster sellers, for me, this is a trigger to start seeing that momentum higher. Right? If we expand a bit above these guys, you can see there's a harsher seller, but again, it's the first step ladder that I'm trying to look at. So the most recent massive sell side is here. If I can get a little pop up here, I can start looking for those longs with the anticipation that this might have been a head fake move under. You put the stops under and pullbacks into this area after moving above all of this massive negative delta have the expectancy to actually hold prices out. So what happens here, you get the expansion higher, right? You pull back, these guys get trapped. These are add moments. These are add moments because we're starting to flush through that strength of that negative delta to look for that reversal to the upside swing, right? And then we start moving higher. Once we move higher, you have very aggressive positive delta that's trying to hold and sustain prices to the upside swing. You can see once we actually pull back into them, what happens? These guys are holding support to see if we can continue the momentum that is expected for the upside. Now, naturally, some of this upside momentum doesn't have the craziest of positive deltas, right? This is the overnight session, so I want to take that into consideration that we might be losing a bit of steam, but lower band areas still have a lot of aggression on the upside. One of the other factors that's very useful here is you see these extended lines that come in on this footprint. These extended lines represent naked areas of aggressive delta over 89 or I think over 99 delta, and they'll extend. Those areas are seen as support resistances if prices come back into them after an extended period of time, so you can see some kind of failure from those regions. So if I'm looking for the longs, right, I'm looking for the accumulation of all of the negative delta that keeps getting rebid, right? It's not necessary that I see positive delta. It's more so getting a lot of sellers trapped and seeing that passive buy side actually expanding to the upside against all those massive negative deltas. Those are going to be trigger points for me to look at this from the perspective to the upside swing. Once you start to see the accumulation of delta on the profile into a key area, that really helps. So we're going to be talking more and more about the execution, putting all these things together in a later video, but this is a very important factor for that execution. Once I start to see these guys actually holding some of this negative delta and pushing up against it, I'm going to look to set triggers to actually get into prices. So if I'm looking for the longs, realistically, big negative deltas that actually get rebid. If there's a huge positive delta, that's a massive added bonus here on the Nasdaq. And then into the upside, if I'm looking at sell side momentum, this is where it gets a bit different. If I'm looking for sell side momentum, honestly, I still want to see massive sellers against the trap buyers. So if there's trap buyers, right, that's fantastic, but I really need to see this negative delta coming in and actually holding a reoffer for me to say, okay, realistically, this is going to be a spot where there's going to be a failure. This is where S&P and Nasdaq differ a little when it comes to the footprints. On the S&P, in terms of trending moves, it's the same concept, right? Trending moves to the upside swing, I'd want to see the accumulation of positive delta stacking up, creating this like stair step into higher highs, higher lows. On the sell side, I'd want to see large negative delta doing the same thing. However, if I'm looking at massive turning points for the long side, right, for the short side. When I'm trying to get long on the S&P, I need to see aggressive positive delta actually holding bid. So when you come into this area and you have some negative delta with some big positive delta, I want to look at the next candle to see if they actually hold bid. This is where you have another positive delta. It pushes up, it comes down, it pushes up, and it starts breaking some of this sell structure on the way down. Now I know into this spot over here, somewhere between 23 and 25, you have a lot of positive delta that's trying to hold this price out, so I can try to get long into that point to see if there's going to be that continuation. Without aggressive positive delta on the S&P, it's a bit harder for me to say, oh, okay, this is the buy side. And it's not like, oh, okay, I see one positive delta, let me shoot it. I want to see that positive delta actually holding bid without making new lows and sustaining continuous reactions to the upside instead of these droopy little slightly lower low, lower high areas for me to actually shoot that along. So I need to see a positive delta, let's say here, pulls back towards it, right? Maybe trades it, but doesn't create new lows aggressively. Instead, we're starting to create the potential for higher lows. It's the same thing on the sell side. If I'm a seller on S&P, what I'm looking at is, number one, on the way up, right? Just like the Nasdaq, on the way up, is there going to be any kind of support that may frown upon us? Realistically, these guys over here, the passive buying and trap that are trying to hold incrementally. Number two, I need to see aggressive negative delta towards the tops of the rotations. Even if it's against all this positive delta, I need to see the negative delta holding offer. Once we break this area, we have another spot of negative delta over here to hold the continuation. That's really going to hammer in the potential for that short. So S&P, I want massive negative delta holding sell side, massive positive delta holding buy side, multiple tests. With Nasdaq, I can get away with people just getting trapped and seeing the absorption of delta at those areas. So to review, what I'm looking at on these footprint charts is I'm looking at the delta and how prices react to the outlier delta. That's these massive imbalances in terms of the light colors. So I really want to see those light colors shape up at key areas if there is a delta profile, right? A delta profile absorption created to actually hold out buy side or sell side. So let's take a look at this quickly. Now, if I'm looking at the S&P into these lows, right? This is the trade into yesterday. So if I'm looking at the S&P into these lows, number one, I'm looking at where the auction area is. This is a little prelude to the execution that we're going to be talking about in the next videos. So number one, I want to look at what's going on in terms of the auctions. We have a developing balance into these highs like this, right, on the S&P. This is the new developing balance area from about 25 all the way up to about 60. The prior day balance start is right at 23 over here, right? So we have a double confluence at that area to see if we can hold things out. So that's the spot that I'd be looking at to see, okay, if there's going to be any buy side, it might be from this area. Now, first and foremost, we have this huge block of all of this negative delta to begin with from over here, all of this absorption. They hold it once, they fail to make a new high, they come back at that point. Lower highs tells me possibility of a break. Once you move under this huge block of negative delta, you're looking for that sell side actually. So we can see at this point in and around 65.36 on the delta chart, if there's any kind of sell side momentum from the delta to tell us into this block we can sell rallies, right? But the bottom band of the developing balance is somewhere over here. So when I see the buyers start stepping in, right, I start to add into some of these positions with a larger stop. The true buyers start stepping in here, right where this huge block of negative delta gets created in and around that distribution bottom, which is 25. That's the spot that I want to focus on. So if we take a look at the footprint, what do we have in those situations? So first and foremost, we're looking at the movement under into that 36 to see if there's any sell side. So we break that huge cluster of that negative delta. Okay, fair enough. We leave behind some okay sellers. This guy gets a little trapped. They hold off for larger sellers over here. They continue with larger sellers. Okay, we can maybe sell 35. this is a good creation to continue that momentum lower. There's no real aggressive buy side to tell us, oh, there might be support there. So when I look at this down here, you have this huge buy side momentum over here. It pops up and I'm looking at this, okay, I can start buying around 26, 27. It's a little premature. Why? Because the best thing that I can do is where this huge positive delta comes in to say, let me see the retest. Once they retest and positive delta comes in at a lower price and it shoots even higher than these guys, that starts to create the potential for the longs into that area so that we can continue to the move. To recap, right? What we're going to be doing next time is diving more into the execution with specific setups. But to recap this video, footprints let us see the buying and selling within each candle. More so, the aggressive buying and selling with delta at each individual level on the candles. What we're doing with that is looking for the reactivity when those outliers come in to tell us there's actually support or resistance structure. Reading strength, weakness, absorption, and traps is very key to understanding the battle. So as we make the move into an area down or up, what kind of information of massive delta imbalances is actually being presented in the charts, right? That's a very important factor. So we know, okay, that's the potential of the move. It's going to struggle here. And while executing ties it all together, today's focus is building a foundation on the footprint to understand what it is that we're looking at exactly, where are areas of interest, and how we can build on this with the actual execution factors. So next time we're going to dive deeper into the footprint with execution and everything that we've learned so far, auction market theory, the setups, the delta profiles, volume profiles, and so on. So if it was helpful, drop a like, hit that subscribe button, and let me know in the comments what footprint questions you might want me to cover in the next video, and I'll see you guys then.